Hey, what's up guys? John here with the Santa Monica Promenade. And Santa Monica just passed a law just a couple days ago. And this law says that landlords are no longer allowed to increase rent more than $76. And they're going to be forced to assume all the newfound costs of property tax increases and property insurance increases. This is at a time in which Santa Monica Promenade is basically dead. I mean, look at this. This is during work hours. 9 a.m. Thursday, nobody's here.
The 3rd Street Promenade in Santa Monica was once a thriving and hip place to go to shop and eat, but locals say not anymore.
Look at this. This big sale for lease sign. It's all over. Over here, another one for lease right up top there. And look at this. This is absolutely shocking, the deterioration unfolding in Santa Monica. But even more shocking is what's about to happen to a lot of these landlords, a lot of these people that own property inside of Santa Monica. Now, I'm going to show you what's going on here. I mean, look at this. Another one for lease right there. This one for lease. It's basically every single, I would say conservatively, 60%, 70% of all the stores are basically out of business as of now. And that number is going to continue to amplify as we begin to see a lot of these business owners see a lot more pressure coming as the consumer continues to get squeezed. Because how many people are coming to Santa Monica, to the promenade? Look, it says Santa Methica. How many people, and they're complaining about how everything is run in Santa Monica.
Store manager in Santa Monica is concerned and fed up with the recent rise in retail theft across Southern California.
You can't make this stuff up. How many people are coming here to spend $1,000, $2,000? The answer, not many, because you can see it in all of these stores basically closing down. But the real kicker though is going to be what's going to happen as these policies continue to spread, because it's not just here on the promenade. I'm going to make a left up here. I haven't even been up here, but I'm going to show you just so you can kind of get a clear idea as to what's going on in this city. Also, please hit the like button. When you hit the like button, you people share the content, educate more people about what's happening in America, what's happening inside of our economy. Because, you know, I've been talking about this on this channel, saying we're going to be walking into a full-blown crisis in Los Angeles and a full-blown crisis in America's economy, unlike anything we've ever experienced. Here's another one for lease right there. You know, it's crazy. Like, it's absolutely crazy. I remember when this was the spot to be. If you lived in Santa Monica, if you lived in, you know, this general area, it was a massive, massive, massive flex. Now, if you live in Santa Monica, you know, a lot of people feel bad for you because, especially if you bought in the last couple of years, people are realizing, you know, you probably lost a lot of money. Now, the real kicker here, though, is when you look, here's another one for lease. When you look at what actually unfolded inside of the real estate market, think about this. These buildings were selling for a 3 or a 4% return. You know, a 3 cap, maybe a 4 cap. You know, some cases even high 2s, because everyone wanted to be on the promenade. It was basically like being on Rodeo Drive. And so what that means is that investors were willing to accept a very small return to be able to be on that main strip and have their business right on the face of, you know, where thousands of people were walking by every few hours, right? Everyone wanted to be there, but now no one's there. And so what does that mean? It means rents are going to need to come down dramatically to be able to attract a tenant, right? Because think about this. This one right here, this is for lease as well. You see it right up there. Like, here's another one right across the street for lease, right? Rents are going to need to come down. Here's another one right here for lease. And this is, you think about this, like 15, I would say 15 opportunities to lease, some office, some you know, retail, another one right across the street for lease. Right there, see the sign? Right, all these opportunities to rent, what's going to happen? Prices are going to be coming down. So prices are going to come down, interest rates go from 3% to 7%, insurance going up, taxes going up, and a consumer is struggling, and you have $2.2 to $2.7 trillion worth of this debt that has to get, another one right there for lease, has to get rolled over in the next couple years. You're going to see a crisis unfold. But what they just did to landlords is the real shocker. I'm talking about housing, landlords that are in multifamily. Before, people were talking about you're going to see 15, 20% annual increases in your rent. Landlords are like, hey, I want to invest. Such low interest rates. We can go out there and we can buy incredible deals right off the ocean, and we could realize these massive returns. Another one right here, for lease. Another one right across the street. This is a different one for lease. We can realize these massive returns, and we're just basically going to be a money printer. It's going to be a money glitch. But now this new law came in saying that landlords are no longer allowed to increase rent more than $76 per year. $76 per year. Now you think about what this means. If you're a landlord that bought a building, call it a $5 million building, you can call it $1 million building. Maybe you bought a duplex. And you bought this deal, well, say 5 units, because 5 units is commercial. So if you buy 5 units and above, it's a commercial loan, meaning you have to refinance it every 3, 5, or 7 years. So if you buy a deal and you bought it at a 3% mortgage rate, and now another one closed, and now this loan needs to come due and you have to go back to the bank and refinance it, your payment is probably going to double. If you're going to go from a 3% to a 7%, probably going to double, and your insurance and taxes go up, and you can't push those costs on to the tenant. What is this going to mean? Well, if you bought it at a 5% return or 4% return, it's going to mean you're going to go out of business. That's what it's going to mean. And so what I think is going to happen, you have office right here for lease. You have more office right there for lease. It's basically everywhere. Like there's housing right up here. I'll show you. What's going to happen here is going to be a situation where these regional banks that are holding 80% of this debt are going to have no choice but to foreclose. It's going to be very, very hard to work with a lot of these landlords when they bought a building and the building's worth half of what they owe and or what they paid for it, and they have no ability to increase rents to increase the value of the property, because multifamily is essentially valued at what the net operating income is, what the income of that asset can generate. And if the income of the asset is capped and expenses are only going to grow, well, you're going to have a bloodbath, right? That's what's ultimately going to happen inside of the Santa Monica real estate market. Look at this. More for lease right across the street. And this right here is the apartment building. The apartment's right here. And so what are you going to have? You're going to have a dynamic where you're going to see tenants start to leave. You're going to begin to see a lot more landlords walking into financial distress, and a lot more opportunists stepping into this market saying, you know what, hey, if rent's $3,000 and I can't increase it at $76 and no more than $76 a year, okay. But if it's foreclosed and I'm buying a $5 million deal, call it a 20 unit deal, but I'm able to buy it in distress at, call it $2.5 million, then it might make sense to acquire that asset, right? And then so everything is going to start to get repriced. So I believe what we're going to start to see here, and not just Santa Monica, but in many cities all throughout California, San Francisco, the very similar policies, Venice Beach, LA, we're going to start to see all of these types of changes begin to step forward, presenting a massive opportunity for these large institutions to win the game. Santa Monica wasn't always this, posh, beautiful place. So Santa Monica was a rough place in the 70s, in the 80s. People didn't really want to be in Santa Monica. But then it became really, really cool and hip and gentrified, and everyone wanted to be here. And now it's starting to go back to, that 70s era where people don't want to really be in Santa Monica anymore. This is where the capitalists, the big investors, are going to step forward and just begin to acquire everything. And it's a problem. It's a really, really big problem, because the city of Santa Monica and a lot of the people making the rules in Santa Monica and California pretend like everything is for helping the people and helping the renter. But at the end of the day, is that really what's happening? Because if mom and pops lose their property and corporations acquire it, and corporations can step forward and start acquiring all these properties, when does the tenant ever get a chance to buy it? You think the corporation is going to ever sell it to the tenant? I don't think so. I don't see a day in which large corporations say, you know what, let's work with a Let's work with the tenant so we can sell them this asset so they can, you know, take control of their own destiny. I think what's going to happen is the complete opposite. I think that these corporations are going to realize, hey, you know, we can charge X, Y, and Z, and if the consumer is earning this, then we can continue to increase rents based on the maximum which we can afford, and we can start upselling them all these different premium services, you know, whether it be, you know, daycare, whether it be high-speed internet, whether it be, you know, dog walking services, whether it be, and they'll start bringing in every single service that you can possibly imagine to try to extract as much money as possible. That's what makes the most sense. It doesn't make sense to ever see a day where these large corporations are going to buy up all these properties for cheap and sell them to consumers. All these apartments cannot be increased more than $76. It's unbelievable to me. What property rights? You know, I left California in 2021. I had a really big vision of acquiring tons and tons of properties in certain pockets throughout LA. And then when 2020 happened, I looked at the writing on the wall. I said, you know what? And I made a prediction on this channel. I said, there's going to be no way in which this ends within 30 days or 60 days or 90 days. They kept moving it. I said, I'll bet you that it's going to be years before this expires. It was 3 years. 3 years until the eviction moratorium expired. How does that make any logical sense? Think about that. If you're a landlord, and at that period, during that entire period, another one right here for lease, during that entire period, people are making more money than ever. Stock market was booming, crypto was booming, everybody was just raking it in, but you didn't really have to pay rent in LA. How's that? How interest rates are basically zero, but you didn't have to pay any rent, and landlords had no, you know, means to collect. They had really very limited rights. They basically could sit on their hands and just absorb losses, right? And it didn't make any sense to me. That's why I'm like, you know what, I left LA, went to Florida, and I said, you know what, I'm gonna stay here for a while, and I'm gonna see what's gonna happen, because none of this makes any sense to me, none of it. And so that's what I did. And now, you know, looking at the writing on the wall, I think we're gonna see a lot of opportunity. Am I gonna run out here and buy multifamily in Santa Monica? Hell no, no way. Like, not at these prices, nowhere near these prices. There's just so much risk unfolding right now throughout California, throughout the country, that is not yet priced in. I think a lot of people are in denial about what is really going on in our economy and in our world. There's just I think a rude awakening coming. Even Barry Starlight, the CEO of Starwood Capital, one of the most successful real estate investors in America, he came out and said that he believes we're going to see a bank failure once a week or possibly every other day. You think about that. If we began to see something like this, what would this do to lending standards? Lending standards are greatly contract. If lending standards contract, what is an asset really worth? Well, an asset's really worth what the highest bidder, the most ready, willing, and able buyer is able to pay. If buyers are getting squeezed out of the market and there's a lot of supply, what are you going to see? See prices come down for a lease, right? You're going to see prices come down. And that's what I think we're going to be walking into, a contraction of capital, a scared investor, and, you know, for most, and then a very opportunistic investor who's going to see the writing on the wall with all of this opportunity. And I think we're kind of in the middle of this now, where a lot of people are sitting on a lot of money because they know in the future we're probably going to see some incredible opportunities. And a lot of people are just kind of sitting on the sidelines saying, you know what, I think there's more risk investing now at these prices than just holding cash, even though inflation is, you know, pretty crazy. And that's what I think we're going to start to see. We're just going to see more and more people sitting on cash, more people waiting as these landlords bleed out and these regional banks start to walk into true financial hardship. So I think this is going to probably be, when I mentioned, I think we're walking into the greatest wealth transfer of all time. Walk around Santa Monica, walk around LA. You know, some people might say, oh, John, that's the pinnacle of the problem. Santa Monica, LA, San Francisco, like these are the worst places. Look, I was in Austin, I was in Phoenix. I saw massive oversupply of properties throughout all of these locations. I mean, within Austin, there was 18 D.R. Horton projects within Austin, within like a 10-mile radius of downtown. And there was 19 Lennar projects. They're building thousands on top of thousands on top of thousands of houses. When the job market is starting to soften up, you're seeing, the excitement of being in Austin really kind of fade, and you're just seeing massive supply. You're just going to continue to see, I'm telling you, rents soften, tenants realizing they can get a better deal elsewhere, landlords panicking, banks being very, very, very cautious, and more insane policies that are going to be coming that are going to impact landlords negatively. So if you are a real estate investor, or you plan to be, I think the next couple years are going to present massive opportunities if you have cash, if you are educated, if you know your market, if you understand what's really going on. You're going to have a lot of opportunities. But I think most people, honestly, looking at the writing on the wall, it's too concerning for them to really absorb this, and they just pretend like, oh, everything's going to go back to 2019. Everything will be good. Just buy an asset with a 4 or 5% return and you'll be good. Why would you buy an asset with a 5% return when T-bills are returning, more with less risk, or maybe the same amount of risk, and you don't have to deal with tenants? Why would you do that? If inflation, they say, is 4 or 5%, if you believe that number, why would you buy an asset that could produce a 4% return, a 5% return, or even a 6% return if inflation is that, right? Like, best case scenario is a break even. Doesn't make any logical sense, right? Massive opportunities. I mean, look at this, for lease. This is all throughout Santa Monica, all throughout LA. You're just seeing the same exact thing, for lease. Just no doubt, a massive opportunity is going to be coming. I think an opportunity to create generational wealth, and it's likely going to be for those opportunities are going to be for people that are just prepared. Everybody else, I think, is going to walk into a really, really, really challenging spot where they're going to be selling this dream of, we can handle this. We can make rules and protect you, to make everything better. We have to level the playing field to make the world a more fair and just place. Anyone that believes that there's going to be some perfect solution that's going to protect tenants, I believe, is going to be in a world of hurt. I mean, look at the stimulus package. Everyone was thinking, oh, this is going to be great. We're going to be able to get $1,200, and we're going to be able to get this money and stay home and play video games. How is that working out for everybody, right? What do you think about this entire situation? Drop below. Let's have a conversation about this. I mean, we live in a crazy world, like an absolutely crazy world. A beautiful world, though. A beautiful world. I'm not, don't want to be, a downer about it, but definitely an uncertain world that we all need to be prepared for, and a world in which we can't rely on anybody else for, any handouts, any type of, solution for. We have to all get ready, because I think the game is about to change. Let's have a conversation below. If you'd like to fix your credit, we'd love to help you. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue at all like that on your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call. Catch you next video.